Yo, what's going on, you guys? Welcome back to another trading recap. Today is a Sunday. Usually on the weekends, I try to take a little bit more time for myself to kind of wind down before the week, catch up with market data that happened, headlines over the weekend, economic data going into this week, and kind of just taking a little break away from the charts and my business. Sunday's a little bit of a day to relax for me. But I do want to go ahead and push a little bit more on the YouTube channel. I've been making my effort to post at least, once a week at least. And I want to make the commitment to you guys to help you guys better understand, once again, how we're able to make these profits and understanding my entries here with these trading recaps. And today I have a trade with you guys where I made, I believe it was $700 in an hour trading Microsoft. And this was a very interesting trade. I noticed that Microsoft had gotten sold off, I believe, like May 12th from 410, and I knew that, being the bullish market, we have tech earnings, there's a really big potential for her to find some sort of a support level that I'll break down with you guys later on. So this trade right here was $1,621 to walk away with 2,360, making us a 45% return on our investment. So this one was a little bit more higher capital. Of course, risking 1,600 isn't just, easy for everyone to do. So it does require a little bit more confidence, right? It's not just about you having the money and being able to do that, but actually being confident on the investment. So, I really hope that this video is able to help you guys understand, a little bit more about my entries and how you yourself can replicate it, right? Kind of the mistakes to avoid. And other than that, now jumping into this trade, we have the charts right here. I like to kind of catch these up right here, 636, 635. So we're off by a minute each. So immediately, I always like to trade with my ETF on the left, and I like to trade my ticker on the right, especially when the company is involved in the S&P 500. I do like to track broader trends. So noticing that in pre-market on SPY, we got shot down from these overnight highs of 740, 741. And I noticed, hey, we're very strong. Look at what happened May 12th. That SPY trade, I'm gonna go ahead and recap that one next. But this one absolutely obliterated. Look at that gain, bro. Entered there at the bottom, sniped that all the way to the top until previous sell point over here at 735 practically. So I was like, boom, we have a strong market. There's a lot of buyers currently present. So this overselling, in the pre-market, hey, this could drive us up. And really, like, one thing I have to start doing is with these market trading recaps, doing them the day of. Because the day of, I'm not just relying on oversold scenarios, pre-market levels, previous prices. I'm using my key levels, but on top of all of those tools, I'm also pretty well informed. I know what the general trend in the market is. I know with geopolitical, Iran tweets and Donald Trump tweets, what's the condition of the economy, right? And I'm more informed with different data sets and stuff. So we kind of seen Microsoft get that sell-off at 415, rejected all the way down to 401, lost $15 in share value in less than 24 hours. Extremely oversold scenario. That's big. That's a lot of money for some individuals. That's a good capital market cap hit. You're losing billions of dollars once you're losing multiple digits, right, in share price. So I was like, okay, this shouldn't be too much of a scare. I think around 400, right, these flat tens, fives, hundreds are key levels. Flat 400, it's going to be pretty rare for investors to let that go below 400 just because it's a psychological level. It's a level where people will pay for, 398, 396. You're just keeping things at 4. You'll see it across, other stocks. Like it's Meta, Meta has been hugging that 600. Very hard for her to lose 600. Google, I believe her top is 400, very hard to break above that 400 level. A lot of resistance there. 400, struggling to get above that, but has the potential for it, right? And that's where you see these key levels of hundreds, 50s, even on smaller scales, 10s and 5s, be respected and act as support and resistance. So, I knew around this level of 400, things could get juicy on the buy side. So I was like, what, let's be patient and let's look for an entry. So I like these trades that I kind of wait a little bit to enter because I'm able to break down to you guys a little bit more about the key levels, right, when I'm in them. So once I identified, this support establishing and holding from this pre-market support, SPY beginning to try to flip green after this very aggressive buy day, I was like, look, also you can see SPY too, holding up that support at 736. I'm surprised this isn't a whole number, but it looks like 736 3/4 was like that support. Even into pre-market, you could kind of see her hold that blue line right there. And once you see that kind of established again, you know, you can, at least I was able to kind of feel a little bit more confident on kind of a little bit of a green day on the market. So I'm in the trade, I already want to be able to kind of calculate where's my exit. When I tell you guys, before taking a trade, knowing where your exit at is damn near just as important as knowing where your entry is, I mean it. Because if you have no target for your exit, you're just going to be holding, hoping for miracles. And also your stop loss. You got to know where to draw the line on the negative side, right? And thankfully, this entry was really good that even when we did go through some drawdown, I still was able to maintain that support, and I knew not to cut it. You know, I feel like as an investor, it just takes experience to feel these confidence, to build this confidence, right? To hold these positions just a little bit longer for them to play out. And I was aware here at this level of 404, look at previous rejections. Boom, 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 boom. We couldn't get above that 404. Even previously, just like 5 minutes before I exited, still was struggling to break out of it. So I knew not to be greedy. You know, of course, there was maybe some money to be made on if I would have held it a little bit longer. But right there at the top, pre-market levels, right when we opened, rejected off of that 405. And remember, fours, hundreds, ones, wholes, 50 cents. It's how it works sometimes, how I've noticed that. Price sometimes gets respected, rejected, and supported. And in this trade, yeah, I think we did close out right at the top there. Our exit was right there at 8:45 a.m. She did probably break up above, maybe ever so slightly. Yeah, that was a green day for SPY, bro. Very aggressive. But yeah, man, that was pretty much summarizing the entry on Microsoft. You know, like I said, just kind of targeting key levels. Like I said, entering at, you know, a support. Hey, riding it out past resistance, seeing, you know, how strong are buyers. One thing I've been able to kind of pick up on myself too is like, when sellers take over, let's say sellers sold off in pre-market, sellers sold off at open, sellers at some point begin to exhaust depending on market conditions. You know, something that's good to kind of gauge where market conditions are at. It's called the Fear and Greed Index. I recommend some of you guys as beginners look at this every now and then. I'm not going to say it's a one shoe fits all kind of tool, but it most definitely kind of helps just understanding the broader market. And you kind of give yourself a clue. Hey, are buyers, right, or sellers more present in this market? And that's where you begin to see when sellers come out strong, there's a chance for buyers to build up their strength and offset that. This is strong selling, very aggressive. On the buy side, weak. Look at this, buy side weak until they develop some strength. But also noticing once they develop that strength, hey look, sellers are still very present in this whole trade. Very aggressive. They're not pushing this above that 404. So once we start breaking above 704, the buying still isn't not half as aggressive as these sells. This is aggressive. Look at how sharp these drops are. That's very aggressive selling, signaling an aggressive seller or aggressive sellers in this, you know, kind of market trend for the day. So with that being accounted for, you know, knowing to kind of view these things through this lens helps when taking profits. You know when you're in a seller's market or a buyer's market, and it helps you kind of minimize greed and just be happy with what you get, right? Take some profits and pay yourself. And that's really how I recommend you guys kind of begin to trade, because at the same time when I exited, you could kind of see, I'm pretty sure this is already 9 a.m. so it was a little bit later, but 8:26 a.m. 8:26 a.m. we had this kind of rejection, I would imagine, right here. You can see 8:26 a.m. boom, SPY was struggling to get above that 739.35 level. She broke it, but as soon as I seen SPY kind of hit that level, I knew, you know, this is kind of near all-time highs for the week. I should be very careful. I didn't expect this push up to 741, 742. So understanding that, right, I began to be a little bit more, I guess you can say, realistic with my expectations with taking profit. And pretty much that's exactly how I'd break down, you know, this trade, and making sure you guys are understanding how to incorporate an ETF when trading these tickers. So you're not just kind of, I guess, trying to predict movement in just one ticker, but using the overall trend of the market to help you time your exits and your entries. And honestly, once you incorporate them both, you'll see a little bit about how it works if you give it enough time, enough experience. And, you know, I feel like the hardest part about trading when you're first starting is just building up that emotional callous, you know, those resistance, that resilience to be wrong, lose some money, you know, get back in that ring. It's gonna happen, but every time you get back in that ring after losing, you have a little bit more skin, a little bit more, you know, armor built on you emotionally, physically, with your capital, right? And it helps when you start to I don't want to say thug it out, but you know, when you begin to develop this resilience for losses, you see things that improve your trading, avoid losses, right? And you build up little rule books, which is another thing that I share with you guys. You know, journaling, that's huge as well. I make these trading recaps myself to be able to share them with you guys. Like I said, I just gotta get better at doing them the day of, because then there's so much more clarity, so much more details I'm able to provide with you guys. But other than that, man, I hope you guys enjoy this Microsoft trade, and you guys have been enjoying the videos and market recaps. Remember, all this money is extremely hard to make. By no means do I want to share that this is easy. It does require a lot of confidence. I take these trades with my guys. You know, whenever I buy something, they buy something, and they're able to ride, you know, with me and make pretty serious profits. So if you're interested in an opportunity like that, where you can trade alongside me, or you know, someone a little bit more professional, you can learn the basics, learn the ropes, make money while you learn rather than lose money while you learn. It helps speed the process up a little bit, and that's what we do here at SoCal Trading Group. You know, we accelerate beginners, you know, so they don't struggle, bro. They don't go through the hardships that we went through. But other than that, man, I hope you guys enjoyed this video. Thank you guys for watching. Jerry Trades at SoCal Trading Group, over and out.